RFT Nation, what up? And I'm back again with another video. In this video, I'm going to show you the Power 1530 New York Open. And as you know, it's not a video of mine without real-time examples on the real price charts of trades that I took, because it's all about practicality. We don't create content here, but we are sharing the information of what really works in the market.
Welcome to RFT Airlines. Welcome to our
Now we are here on the PDF and we're going to start with this PDF. In this PDF, we've got rules that you are going to follow, that you are going to apply on the examples that I'm going to show it to you in a minute. And these are the rules that I followed myself when I was taking those trades that I'm going to show it to you in a minute on the real price chart. Now let's start. Number one, we've got 1530 New York Open candlestick. Now, this candlestick is the one that take us into a trade most of the time. It's the one that it open pushes all the way to our entry point and take us into a trade, and then we jump into the trade and then we make profit. That's what this 1530 New York Open candlestick does. It takes us into a trade. But there are those scenarios whereby it's open and then it ends up being small, it ends up being shallow, meaning it didn't push enough to take us into a trade because just opened with less volume. Therefore, in those scenarios, we will need another supporting candlesticks to paint out right after 1530 New York Open candlestick to take us, to be the one that is going to take us into a trade from there. But I'm going to show it to you in a minute what I'm talking about. And then secondly, we've got the impact of the midnight to 9 range. Now here we want to find out exactly if at the right time is the market going to be volatile or is going to be less volatile. Now this one is going to tell us if can we hold or it's going to be just an in and out mission, in and out, in, and then you take the small profits and then you're out, run away, because the market might just turn out of nowhere because of the volume that is small in the market. So it's so important that we also take note of that. And then third and fourth, it's almost one same thing. It's just that you are looking at it in a different time frames. 9:15 is at 15-minute time frame. H4 is on the 4 hours time frame. Right here. So what we are looking at right here, the idea it is to find the direction of the market, where we are going. Which side are we going to take at around 1530 New York Open? We all find that out from 3 and 4. 5, we've got the average daily range, ADR. Now we are going to see me apply this more often when I'm in a continuation scenario where I have to continue with the trend or the direction that has already been established. Then from there I will have to consider the ADR to check if that continuation is still valid. Can I still continue with that continuation run or not right there? Because of if an ADR, average daily range, has been achieved or reached, it becomes difficult for the market to push through to continue to the direction. But what the market does instead, it just gets exhausted, meaning consolidate, or simply just reverses back down from there. So it's so important. Lastly, on the sixth, then we've got the entry window in the market. Let's say 1530 didn't take us into a trade. So how long will that entry be valid? It is be valid from 1530 to 1630. That means we are waiting to be tagged into a trade as from 1530 to 1630. If the market didn't take us into a trade up until we are on the other side of 1630, that means I'm not going to be part of the trade anymore. Even if the market could get back to my entry point, I'm not going to take that position from there because the entry window would have been closed. So that's exactly what I'm looking for. Now let's head over to the real price chart to show you exactly what I'm talking about in these rules. Let's apply these rules on the real price charts. Now in our first example here, we've got the NQ, and on this day I was able to find a trade. These rules are only applicable on the Nas100, US30 and BTCUSD. Now let's apply all these rules right here to approach the market here. Firstly, we need to identify the direction of the market that we are going to take at the right time. That is why you see me marking 9 and 15, because that's what you said on the PDF of the rules. Here, between 9 and 15, I want to find out if the market gave me a continuation or the reversals. Those are two things that I want to find out right here. Now let us look at here to see what the market gave us. Here, the market opened in peak one direction to the downside. And then it tried to aggressively push to the upside right here, but couldn't match out the swing that fueled the downward movement right here. So therefore, this means this remained as a sell. This remained as a continuation. This is simply just a small retracement that the market would want to continue with to the downside right here. So therefore, at the right time, now I know that I want to sell this instrument, because between 9 and 15 I found the continuation to the downside right here. But before we can play, or before we can talk about the variations of a sell right here, of an entry, we need to talk about the average daily range. That's another thing that you need to check right here. Now, since I was able to find a trade here on this day, that means the ADR was good. We were still in line. We were still under the ADR. We have not yet achieved it, because if we have achieved it, that means I wasn't going to take a trade right here, because this means that this continuation was no longer valid, in that case. Even if like the setup could be good, but if the ADR has been achieved, there's no continuation from there after that right here. So now, the variation of an entry here means I want to see the market open, pick the high first when the New York open. Then after that, right here, the tip where the high, I want to sell. That is the variation of a sell. But if the market gave me a reversal right here, then it was going to be a different story. It was going to be the other way around, to the upside right here. But in this case, I want to see the market here open, manipulate first, then before we can drop all the way to the downside. Right, now let's play this thing to see what's going on. Now here we see now the market open, pick one side all the way to the upside. This is where now the market pushed to, which is exactly where I'm going to enter from. Where the market pushed to have to be your entry point. It shouldn't be something like just because now the market is open and pick the opposite direction, jump in. No, it has to be around the entry point. Entry is so important, in that case. Now, my first TBA here was around the first swing, Then this was around 1:3 risk reward ratio, even though I did allow the market to continue. But let's see. With one or two spikes right here, we are done. We are done. Easy as that. If you continue here, you can see what the market has been doing. Easy as that. All the way to the downside. Then I was able to hold up until somewhere there with this position. So this is how easy the market can be if you have rules and you understand the power of 1580 New York open candlestick. Then on our second example here, we've got the US30 on the following day here. And then we still do the same thing. What we have right here, we are going to identify or determine the direction of the market first. And then you determine it by marking 9 and 15 here. And on this day, easy, I think you've seen it. Now we have the market here that opened in peak one direction all the way to the downside right here. That means that this is a continuation that you just found right here. There is no reversal, since we're looking for either a continuation or a reversal. This was a clean continuation right here. So that means at the right time, I want to see the market open, and then 1530 comes in, go all the way to the high, and then after that I want to see the market drop all the way to the downside right here. My entry have to be up here in this way. So let's see how this thing played out. But before we can think about entering into the market, since this is a continuation, we need to check the ADR first. But since I was able to find a trade on this day, then I think the ADR was good, was still in line. So that means a continuation is valid in this case. Let's play and see what's happened. This day was a bit different, but I'm going to show you exactly how this one was different. You can see that the market here retraced early before 1530. Let's see what happened at 1530. As you know that at 1530, it is where we want to see a retracement back up before we can drop. But take a look at what happened here. The market simply just opened at 1530 on the dot, dropped all the way to the downside right here. This one can be a bit tricky in this one. Now, we still have a way to enter somewhere there according to my entry point somewhere up along the line right there. Now, this one, we've got the market that opened in peak one direction. Now, in order for us or for me to enter as a re-entry, two things. I have to check the ADR since the market has pushed and extends the low right here. Maybe it might have reached an ADR, but on this day, it extends but couldn't reach an ADR. Then after that, another thing that I have to check, if is this re-entry still valid, it's still possible. It has to be in line with 1530 to 1630. If an entry for a re-entry is on the other side of 1630, it will be invalid. It will be invalid. But if it is still on the other side, like in between 1530 1630, then it will be valid right here. Now, ADR here was still spot on. Now let's see if time was still on our side or not. Now we have the market that retraced back. That's 16. Then 1616 is where I was able to take a trade from right here. 1616 is still on our side. 1616 is still on our side according to the timing element. And then 1:3 risk-reward ratio. Even though our first TP always revolve around 1:2 risk-reward ratio, but my first TP was targeted here at the swing right here, at the swing low. Now let's play to see what's happened. As you can see how easy that was. The market went and tipped it out right here in this way to achieve a 1:3 risk-reward ratio. Easy as that. That is how you will be looking at the market. That is exactly how you will be trading this thing in this way. It's easy and it's straightforward. I took more trade last week, but I ain't gonna put them all in one video right here because the video is going to be too long. But I think with this, then you'll be able to approach the market with this type of trading model right there. How I enter, as well as calculation of the ADR or finding out about the ADR, I will still make more videos of that. Stay tuned.